Hello and welcome to Pro Trader Strategies Market Commentary for Monday, February the 26th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember, the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. It's a Monday, not a whole lot of economic data as one would expect, but we did get new home sales. New home sales came in at 593,000 units. It was expected to be 655,000 units. A lot less than expected there by over 50, almost 60, 62,000 units sold, less than what was expected. They did revise last month's number up by about 18,000 from 625 to 643. It's not making up for the deficit we saw this month. What I have to say about these new home sales is, you guys, increasing interest rates drives down the prices of homes, just like bonds. Interest rates go up, bond prices go down. The same thing happens with houses. As interest rates go up, housing prices go down to make up for that deficit. That being said, people are going to be looking at houses that are priced higher than where they would expect once they package in all the interest and everything else. It's just not going to meet what their budget is, for that matter. So a lot of people, holding off on buying houses right now, which probably should send a red flag to the FOMC about increasing interest rates too quickly, too fast. We also have Quarles speaking, who is an FOMC member today. That's later on this afternoon at around 3 o'clock Eastern. All right, on to the overall markets. A couple of things. Markets are, for the most part, up across the board, so everybody's happy. We've got crude oil up about 58 cents, trading 64.03 right now. Friday, we got up into this trend channel. That is going to make it want to continue on this upward path. We got a bit of a correction, which is healthy for the market. It shakes out the weak hands. We went below even the 38 Fibonacci level here. Found support there, pretty much cutting through this trend channel lower band quite easily. Usually that would act as a bit more resistance. You can see it kind of tagged it a couple of times on the way up, but Friday and today we are clearing that mark quite nicely. So we would expect this to start trending inside this trend channel for at least a short duration. That's a nice 45-degree angle for the most part. All right, gold futures up also by about $4. Staying solidly above this 78 Fibonacci level. That's really acting as support and resistance lately, which just happens to coincide with 1322-ish. That's going to hold this market up, especially with inflationary fears, things of that nature. We could see gold stay elevated. That doesn't help out my long puts, but I've kind of written those off anyway already. All right, we've got the Bitcoin futures trading back above 10,000. This morning it did trade overnight down below 10,000, but as you can see, we've rallied up right back to where the point of control is, right in line with 10,000. We're off by about 50 or something like that, but for the most part, you can see there's support and resistance. A lot of transactions going on right at that 10,000 mark as people try and place their bets, if you will. All right, bonds are up 11 ticks on the day. They were up almost a full point, tested the 9-day moving average. Anything below this, if we stay below this, it's still very bearish. We need to get above there for the short-term bulls to be able to have something to grasp onto, some hope. But I don't really see that happening anytime soon, especially with the rhetoric we're seeing coming out of the FOMC. VIX slightly off on the day by about 7 ticks. still in double digits, which is nice. I'd like to see it stay up here, at least above 15, 18. I love it in the 20s, that's for sure. I'd love to see this volatility stay elevated for a little while longer so we can take advantage of high implied volatility, especially around earnings. That would be nice, but we're starting to see that come off a little bit, and the earnings are really few and far between for the good ones. Dow Jones Industrial Average up over 200 points right now, almost 220, near the highs of the day. NASDAQ, similar situation, near the highs of the day, up 52 some odd ticks. We talked about this several times, this value area high acting as resistance. Friday acted as resistance as we had expect, but today we're cutting through that. The day is not over. It's still going to be a battle throughout the day to try and either settle above or settle below this this trend channel high. If we settle below that, and pretty much settle unchanged, that would be a very bearish signal in my eyes, because you'd have that resistance coming through, and the doji would look very topish. It would look like a spinning top doji or hangman doji, something like that. Or actually not a hangman doji, but more of a spinning top doji, a hammer or something. But right now, not seeing any weakness in the markets really whatsoever. We got the E-mini S&Ps. Friday pierced above the 23 Fibonacci level, settled above there today, unabated to the upside. We're just a nice little move. It's pretty quiet. I mean, it's a pretty tight range, but you can see the overnight inventory got long. Daily session didn't really care if you're long or not. It's just really started consolidating, really trying to find a path to move in. I think the path of least resistance is the upside right now, especially with all of this winding of that rubber band where we're getting wound up really tight. It wants to break out in one direction or another. Since we broke out to the upside here, and just no attempt to really cover overnight inventory longs, I think that is a very bullish sign as of right now anyway. So trying to push, look how tight this range is. We haven't had a range that tight in several weeks. At least so far. It's still pretty early in the day, but just not a whole lot of data or any kind of news to kind of trade on right now, so the markets are pretty quiet. All right, on to a few trades that I did on Friday. With Tesla, I added some January 2020 puts in there for this trade. I'm pretty bearish in Tesla for the most part, and I've been looking for opportunities. It spiked up on Friday. It's moving higher again today. But with the recent moves higher, I decided it was going to be getting up near this resistance area, value area high. This acted as resistance here. I think that we're going to see some real resistance up here. Plus, there's not a lot of great news coming out around Tesla right now. So I think that the momentum is going to be shifting on these electric cars to other automakers. They're starting to catch up with Tesla, and I think that people are going to find that these other companies are a little bit more reliable on their delivery of their products. And I think people are going to kind of start shying away from Tesla, despite the fact that it is a cult following, if you will, that these people are really willing to let Tesla off the hook on a lot of other things. If these kind of issues were happening with Ford, GM, they'd be in the tank right now. So I decided to go in there and buy some puts with Tesla. And I went into, like I said, those January 2020, bought the 150 puts in there. So I'm looking for that to trade out. What did I pay for those Tesla? Forgot to pull all of this up. In Tesla, for what I did on that on Friday, I should have written it down. But in Tesla, I did those 150 puts and I paid $11.80 for it. So pretty steep, but what I'm going to start doing is selling maybe some puts on days where we start getting a little bit of higher action, shorter duration, try and lower some of that basis on there, and maybe even sell some calls against it. I haven't quite decided, but it's going to kind of be all dependent in and around the environment for Tesla. So I'm going to be doing some things to kind of lower that basis for the next 2 years, it looks like, or if I get my directional move, I'll get out of those relatively quickly. They are a ways away, a lot of duration in there, not a lot of theta decay happening. So if I get a directional move relatively quickly, it will be quite a nice trade. But, it's a shot in the dark. That's one of those ones where I'm just taking a home run swing on. I have a pretty, I'm very bearish Tesla. I just think that they're not a very good company. All right, so anyway, XOM is something I covered on Friday, and in XOM, I had this both in my margin account and in my IRA. Let's talk about my IRA first, just because it's a little bit muddier. And I had on the March, was short the 72 puts in there, defined the risk by buying the 65 puts. Basically, the first one I could get for a nickel. Sold that spread for 33 cents. Just bought back the 72 puts in there for 16 cents on Friday. So a nice little profit there, shooting for about 50% of my max profit, and got about a penny better. But leaving on those 65 puts because there's no sense in taking those off for like a penny or two. I'll write them out in case there is another market correction. In my margin account, I did the same March 72 puts in there. I sold those for 40 cents. Was able to buy them back for 16 cents as well. Didn't define that risk in my margin account. Now, that is for XOM out of both my margin and in my IRA. We've got Procter & Gamble. This is another one that I took off. Only had this in my only had this in my margin account. Did not have this in my IRA. And just didn't have an opportunity to define the risk on those. But I went in there and sold the 85 calls for 33 cents, was able to buy those back for 11 cents this morning. So, got out of those for 11 cents on Friday. You can probably get out of those better than 11 cents today. They're probably trading closer to 5, 6 cents. You can probably get about a nickel better than where I got it. All right, a few things that I'm looking to get out of. I've got a lot of trades where I'm long deltas by selling short puts in there. In Amazon, I'm short the 11.95 puts. Looking to get out of those, well better than 50% of my max profit. That market's kind of been all over the place right now. It's trading around 87 cents. This morning, when I was making the market in there, I was trying to buy them back for 52 cents. It was my bid. Nobody ever hit me. The market's gotten tighter now, and it's trading around 75, 80 cents. So I'm well off that. I'm working 52 cent bid. But if we continue to see this market move higher, I might easily be able to get out of those today. So I just have a working order on those, about a dime lower than where we are. So with Amazon's moves, we very well may still be able to see something like that today. The other thing that I'm looking to get out of is UPS, both in my IRA and in my margin account. If you remember, I have on a put spread in my margin, or my IRA. I have on the 95 puts, along the 85 puts, trying to get out of just the 99 puts. And in my margin account, I'm trying to get out of those same 99 puts right now for 21 cents. They're trading 23. It's still better than 50% of my max profit on those UPS, because I think I sold those for a little bit better than 50 cents, right around there. So looking to get out of those for better than 50% of my max profit. Also looking to get out of Texas Instruments is another one that I've just had I have an open order in there. Got the directional move to the upside. I'm short puts, so that's helping me out. Volatility, as you can see, is trying to come out a little bit here. But in the Texas Instruments, I have on the March 95 puts in there as well. It's not quite 50% of my max profit anymore. The market's seeing this volatility slightly spike, which is, I've got the directional move there, but this volatility spike is actually making it a little bit more difficult to get out of those puts. I'm trying to get out of them for 21 cents, and they're trading right around 23, 24 cents. So Texas Instruments is another one I'm trying to get out of. UPS I talked about, Amazon, and finally Qualcomm is another one that I'm looking to get out of as well. Got a nice move today to the upside. Short puts in Qualcomm on the short March 55 puts. It's trading around 20 cents right now. I'm trying to get out for 13 cents. Which is much better than 50% of my max profit on the Qualcomm, because Qualcomm, I think I originally sold those for around 60 cents, actually 60 cents, just kind of doing the math in my head. And so I'm better than 50% of my max profit on that, but I'm squeezing out a couple extra pennies with this market moving higher. Continues to look like it's making newer and newer highs. I'm not really expecting the market to start to correct right away. If I start to see a market correction where the market really falls out of bed, I'm going to go in there and start pulling the triggers on these things. because I'm squeezing them out for more than 50% of my max profit, and that is better than my target. Therefore, I'm going to be very nimble on this, looking to get out of it rather quickly and not miss my 50% of max profit. Right now, I'm squeezing it, as we used to say on the floor, trying to squeeze out every last penny right now. All right, so that's what I got going on today. That's about it. Friday's webinars are going to be a really good one, so go to protraderstrategies.com and sign up for that. Also just did one on the long call butterfly. You can check that out as well while you're there. And that's about it for today, other than if you can't take that, take it easy.